a tale of two crypto markets. The bullishness of the institutions on the one side, and then just absolute lack of retail interest and complete apathy on the other. It's very tough out there. If they're trying to make ends meet, they're not going to go and invest in speculating in magic internet money. There's Coinbase again trying to sell me NFTs and altcoins. Why would I go and invest in that? Some people point to the 300-week moving average, which is about right now a 50K. That's what they call the deep cycle magnet. We could go that low potentially.
A lot of people were saying that the 4-year cycle is over, and that since we didn't have like a proper blow off top in 2025, we shouldn't have expected a bear market, or at least a severe bear market in 2026. Do you think that those narratives are still relevant today?
It's a tough one. I think that it is true. First of all, in terms of the question of whether the 4-year cycle has been playing out over this past most recent cycle, it was kind of invalidated because if you recall, back in 2024, we had an all-time high prior to the halving, which doesn't usually happen. So in that respect, many then had thought this whole concept of what had previously been driving Bitcoin's price in the 4-year cycle had been invalidated. And indeed, as you point to, the fact that there was no blow-off top last year meant that we weren't going to go into a bear market, and many people thought that we would kind of trade sideways, and then eventually in the new year, with new liquidity and the new Fed chair and all the other potential regulatory improvements, Bitcoin would continue its rally up to these high price targets. But as we've seen, especially since October 10th, it's just been a slow grind lower. And indeed, if you map the price action from a high in October, which was 126K, to now, and you map this and lay it over previous falls from previous all-time highs in other cycles going into a bear market, it looks eerily similar. So I think many people want to think that the 4-year cycle is over. And indeed, prior to this year, I would have thought so as well. And that's just not just because of the fact that I thought it was invalidated because of the high before the halving, but because of the fact that the market structure has changed considerably since the previous halvings and the previous cycles, given the presence of ETFs and all the institutional adoption. And those factors would have led to a less of a drawdown in the markets. But now it seems as if it's tracking that way, and there is now a lot of talk around indeed we are in a bear market. It's crossed most bear market thresholds, and now the question is, okay, if we're in the bear market, is it going to play out according to the 4-year cycle theory, and we're going to go down to previous bear market lows, or are we going to be somewhere in the middle, or do we still have potential to go back above the all-time high this year? So, yeah, I think that. I still think we're somewhere in the middle. I don't think the 4-year cycle has been completely invalidated yet.
You said the question is whether is it going to be a severe one, as severe as the previous ones, or more mild. Like so far, we got more or less like a 50% drawdown since the all-time highs. Previous bear markets were more severe. Like in the previous one, I think we saw a drop of, I guess, around 70%. I also think that perhaps we're not going to go as much down for the reason you mentioned, that the market structure has changed. For the short term, what are the levels that you are looking at when it comes to support and resistance?
So I think that the one that many people are pointing to is we've blown up through a lot of previous supports, right? We broke the bull trend when we broke through the 50-week moving average. Then we broke through the 100-week moving average. We broke through we broke through last year's cycle low. We've broken through the previous cycle high. And now it seems many people are pointing to the 200-week moving average, which is around about 58K or so. So that's what many people are pointing to, as well as not only the 200-week moving average, but you have on the on-chain realized price, which is around about the same price. It's about between 55. I think it's around now about 55, 56K. So that range is where many people are targeting as a potential bear market bottom. But indeed, if you want to look at an absolute bottom, we could go. It's possible to go lower than that. Some people point to the 300-week moving average, which is about right now a 50k US dollars. That's what they call the deep cycle magnet. We could go that low potentially. But generally, as it comes historically, people try to. The price that people generally think is going to be the absolute bottom never turns out being the bottom, and it recovers then. And people have their price target set there. They're going to enter at that price, and then it tends to recover before then. Similarly, on the upside, many people had price targets of all-time highs last year of 150k. It got to 126k, and they thought, I'm going to hold on to my Bitcoin. I'm not going to sell. 150k is going to be the cycle top. But people got ahead of them and started selling before them. So it generally tends to correct somewhere in the middle, but that's the price target I think we could look to in terms of a cycle bottom, a bear market cycle bottom.
I'm just curious to know your thoughts on what you were saying before. So the overall relevance of this 4-year cycle theory, people believe in that, and that is why somehow keeps on perpetuating itself. But I always been wondering whether there is a fundamental reason behind the psychological effect that justifies this cyclicality. And you were mentioning the business cycle. Maybe you want to explain your thoughts on this one?
Yeah, so the business cycle theory, that's basically around or you can also call it the debt refinancing cycle. And this is a theory that's posited by a lot of macro analysts, specifically liquidity analysts like the likes of Michael Howell, if you follow that, as well as Raoul Powell, as well as a few others. But it's the notion that every single, like a few years, which coincides quite nicely with the 4-year cycle, but debt has to be refinanced. And this refinancing of the debt impacts on liquidity in the markets because people have to go out and issue new debt, and this obviously impacts on liquidity. And liquidity manifests itself in terms of like when liquidity goes in and out of the markets. This drives assets that are sensitive to liquidity. And the assets that are the most sensitive to liquidity are Bitcoin and cryptocurrencies. And in fact, this is what Michael Howell, if you follow his analysis, it basically he uses these as a leading indicator of what's going to happen to other risk assets. And it's actually quite interesting because it's almost to a T how crypto started selling off last year, prior to what we've seen now with tech stocks and all the others in the S&P, in the higher risk stocks and the higher beta stocks, and they followed the rest of the market down. So that's the 4-year cycle, and then that's, like I say, it's driven by the debt refinancing, which impacts on liquidity. Some people call it the business cycle as well because there's impacts on the macro side. For example, many crypto analysts have been focused on the recent readings of the ISM numbers, the ISM manufacturing numbers, and the fact that they're above 50 means that there's now expansion in the economy. But what's interesting, according to Michael Howell's analysis at least, is that you have liquidity that goes between the financial markets and the real economy. And if you have an expansion in the business cycle, in the sense that you have more money flow into the real economy, more liquidity go into the real economy to fund expansion in manufacturing, etc., it's been drained from the financial economy. So according to Michael Howell's analysis at least, we're now at the peak of the liquidity cycle, and we're now going into a period of restrained liquidity, which we're seeing with the prices of commodities rallying like gold and silver, which is at this point in the liquidity cycle. So it's all just global liquidity. It's all liquidity stupid, and that's what's been driving asset prices for many years now. And I think that because it coincides with the halving to a degree, people tend to perceive it as that. There could also be some impact of the self-reinforcing cycle of, like you mentioned, people thinking this means it's going to be bullish because we've got a reduction in the supply of the inflation rate of Bitcoin. Therefore, Bitcoin's going to go up, and then they chase it. But it could just be the correlation of what's going on in the global liquidity cycle and general liquidity flowing into crypto.
Another reason why people are saying that this market is going this way is because of the quantum threat. There are two opposite sides. There are those who are saying quantum computing is coming, let's do something about it, and those that are saying no, this is maybe 20 to 40 years away. We should not. We shouldn't rush. We shouldn't do much. What do you think about this?
Yeah, so I was previously until about a few months ago, in the camp of it's much ado about nothing. It's so many years away. There's so many other things that they could break, that it could break, that we'd be much more concerned about that than Bitcoin. If we get quantum computing, it can crack the banking systems and national security databases, etc. And I initially, dismissed it to that degree and thought it was a bit of a FUD campaign. However, having spoken to some people who know more about the subject and actually done a bit of research on it, I think that it is a bit more of a concern than we initially than at face value, for a number of reasons. I think, firstly, the progression in terms of the development of quantum computers is taking place now at a breakneck pace. We've gone through a number of breakthroughs in terms of, on the physical level, in terms of how many qubits are required for the logical qubits, which is technically in terms of it's becoming a lot more accurate in terms of its calculations. So the error rates are dropping. And this is taking place not linearly anymore, but at an increasingly exponential pace in terms of the development. So it's coming much quicker than people expect. And then also there's I dismissed the fact that, okay, well, if we do get quantum, we're going to be able to break all the other types of encryption. So it's not just Bitcoin. So there's a much bigger problems to worry about. But specifically that underlines cryptocurrency and protocols is elliptic curve cryptography, which is actually easier it's less quantum resistant than a lot of the other banking RSA systems or RSA encryption. So that's one other fact, that potentially if you get to the stage getting closer and closer to Q-Day, which is the point at which the quantum computers have made those leaps, that you could crack cryptocurrency encryption, much more likely to crack cryptocurrency encryption than you can banking systems. So it's more likely to come earlier than that. And then also in terms of upgrading a protocol, a Bitcoin decentralized network, the coordination is massive, because there's a decentralized network of developers all around the world, and actually upgrading a network of this value. Whereas upgrading banking systems, if you're a bank, you're a large centralized bank, it's you just go and tell your developers, let's go and think of a new quantum, let's go and implement new quantum security procedures. So there's all those reasons why it's a bigger concern than it should be. And in terms of timelines, I think it ranges anywhere from 3 to 6 years. So up to 2030s, when many people think we could have Q-Day in 2030, but indeed, if it's going at an exponential pace, it could come sooner than that. And I was speaking to Charles Capriole, who's also been banging the drum about quantum threats. Charles Edwards from Capriole Investments, who's been banging the drum about quantum threats, and he said, well, look, the way he worded it is, there's a 20% chance of Bitcoin going to zero in the next 3 years, which is a crazy stat. But I mean, that's the way he puts it. Now, whether we can pass those numbers and whether that's exactly true, the point of the matter is that this is a thought that many asset managers, like you mentioned, the one who's obviously thought about this, it's a concern for them, and to the extent that it's not a concern if you hold physical metals. So yeah, I think that is and also I think there was recently an interview with Mike Novogratz on Bloomberg, where he said that he mentioned that quantum could have been a reason as to why many OGs may be wanting to sell their Bitcoin.
And so, do you personally believe that this is a factor on the price of Bitcoin at the moment?
I think it is a factor. I think it is a factor because it is an existential threat to the network. And yes, it may be many years away, even if it's 2030 to 2035 or later. The fact that does exist this threat for an asset that's supposed to be secure for the long term, right? It's one that people will, why would I hold that? I can just hold gold. You can't quantum attack gold. So, but I don't think it's the main concern. There's many other factors. I just think it's something that people are thinking about. They put it in a risk matrix and they think, okay, there is this potential concern. And then they look at all the other factors that's driving Bitcoin price right now that we've discussed and thought, well, I don't like the tail risk profile of this.
It seems that the Ethereum community is taking this a little bit more seriously, in the sense that they announced that this quantum threat is a strategic priority for Ethereum. It seems that the Bitcoin community is very much resistant to change for some reason. And in a way, I struggle to understand why it is so. What are your thoughts on this?
Yeah, I mean, I don't want to cast aspersions at any Bitcoin developers. I think that generally they are quite dog-headed in their approach to many things. I mean, if you think about Bitcoin maxis, right, the fact that they refuse to acknowledge that there's even a need for other types of cryptocurrencies, and especially how many of them view Ethereum itself. I think also maybe there's there's the thought that if they essentially try and address it and basically give it attention, they think to themselves, this acknowledges the fact that there is this concern, and if we feed on the FUD of this concern, then it's going to impact on the price of the currency and also create this narrative. So it's kind of like a bit of burying the head in the sand. And I mean, and I can't speak to their motivation specifically. I can only speculate. But I think that I think that not in privately, in terms of them speaking to each other and working on solutions, they acknowledge the threat, but they're worried about amplifying it too much in the public sphere.
In the last cycle, we saw a lot of news, a lot of bullish elements coming out of the institutional space. We saw ETFs, we saw DATs. We saw finally the US government embracing Bitcoin and crypto. But on the other hand, we didn't see retail interest coming back. And first of all, I wanted to hear your thoughts on the reason why it's the case.
Yeah, first of all, to the point around it's a tale of two cities, right? A tale of two crypto markets. The bullishness of the institutions on the one side, and then just absolute lack of retail interest and complete apathy on the other. And it's a fact that retail interest, like not just in terms of some social metrics, but obviously working with the crypto YouTube space and seeing the stats in terms of retail followers and subscriber growth and views. Comparing now and the 2021 cycle, it's like chalk and cheese. We've never seen those numbers before, and I'm sure other YouTube analysts would have shown these stats as well. As to the reasons, I think there's many, but I think the first and most important is financial conditions are nowhere near as fortuitous for the markets and for retail specifically as they were in 2020. If you recall back to 2021, if you recall back to 2020-21 cycle, you had the stimmy checks that was handed out to people to go and invest in cryptocurrency. You had the mass flooding of the markets with liquidity from the Fed, just money printing in QE. And you also had people locked down at home during the pandemic without much to do but speculate on cryptocurrencies. So that's one of the factors. Right now, there's a lot of talk about the K-shaped economy, although things are looking good on the stock side, and for some people, others it's very tough out there. Most general retail, it's tough out there, and if they're trying to make ends meet, they're not going to go and invest in speculating in magic internet money. Other things to look at, for example, is a lot of competition now in terms of mind share and capital. I mean, look at the AI trade, how much excitement there is to invest in AI. Not just AI, but instruments like zero day to expiry options on all these platforms. This is way more exciting for retail than investing in particular kinds of altcoins. So crypto is no longer the only kid on the block. Look at, for example, metals. I mean, look at what silver price has been doing over the past 2-3 months. And I would say that a lot of the hyperbolic moves that we've seen in silver, especially in the short squeeze side, is retail driven, and especially out of Asia. So there's that for them to focus on, and they dive into that, and they've pivoted into metals, and then all the other stocks that they're looking at. I think another reason is just the mass public perception of crypto, unfortunately, has taken a nosedive in the past 2 years. Politics aside, we can talk about the politics of it in terms of what's been going on in the political level, in terms of how it's now being perceived as one side versus the other, and cryptocurrency is very much aligned with conservative politics. And as a result, you're naturally going to have people who view that as like, well, cryptocurrency is for the conservatives, and they look at what's happened out of Washington in terms of the meme coins and all the other stuff, and then they think, crypto is just a grift, which is unfortunate because it's not. But even before politics, even before a political figure started launching meme coins and presidents started launching meme coins, you had the meme coin frenzy, right? And even though it wasn't mass retail in the meme coin space at that stage, who was there and who did get involved most lost money. I think it's like 95% or so of people who invested and tried to make it within the meme coin space in the past 2 years lost out. So. And that fortunately leaves a bad taste in their mouth. And if they're never going to invest again, and they're probably going to tell their friends that it was a bad experience for them, and they're not going to come back. So the public perception of crypto, unfortunately, is not that great right now. And I mean, you could only, if they had the Coinbase ad on last week on the Super Bowl, and you could have seen people's reactions. So that's just an idea of what retail thinks about crypto right now. And they're just like, it doesn't seem as cool as it was in the past. Like, it's edgy, it's new, it's exciting. It's like, oh, there's Coinbase again trying to sell me NFTs and altcoins. Why would I go and invest in that? And then I think the biggest factor, right, one of the most important factors of any asset class, but specifically cryptocurrencies, the best marketing device for a cryptocurrency or an asset class is the price. And altcoins have been bleeding for quite some time, and as a result, if you're not seeing the moves in these asset classes and these and altcoins aren't catching a bid, whereas Bitcoin's going up and Bitcoin dominance is going up, but altcoins are just continuing to bleed, then people are not likely to want to invest in it. Momentum is a very important factor for people when they're thinking about gambling, or not gambling, but investing in a particular asset class. And in this case, retail, you don't see the headlines about X altcoin up 10 to 100X. So therefore, they're not going to necessarily want to dive into it. So there's many factors there that I think are driving it right now, unfortunately.
Yeah, I agree with all the points that you made. It's a bit sad to think that crypto was attracting people just because of the casino. What are your thoughts on this?
Yeah, I mean, this goes to the incentives, right? Like how it was promoted to people. I think everyone just looked at it as like it's a lottery ticket, and I think this is partly due to the fact that people just didn't explain it well enough. People didn't take the time to DYOR. Like, when I first got into crypto, I don't think it wasn't really because I want to make money. Obviously, it comes with it, but it was because it was such a fascinating technology. The fact that nothing like that existed. I mean, I tell the same story. It's like you experiencing yourself trying to send an international wire, right, from one country to another. It takes days. It's slow. It's expensive. And like, for me, with the first time sending a crypto payment, like a stable, in those days, I think it was like XRP. When like 2016, 2017, I sent my first international payment via XRP. And I was like, this is amazingly fast. And then just, you actually do that and you realize, wow, this as a technology is superior to anything else. And this is why it's the future. And I don't think people actually took the time to appreciate that when they dive in just for the gains. And they don't realize why it's such a transformative technology. And yeah, I think that's one of the use cases. Like, think about for people in the emerging markets, right? In Africa, for example, like there is an entire commercial industry being built on cryptocurrency rails, in the sense that importers, exporters, people transacting in their daily lives, there's nobody who's ever going to be unbanked again, because there's no one's going to stop you from just creating a cryptocurrency wallet, funding it with USDT and trading with people, and doing actual commerce. So that's something which I think is always going to be there. I think that in terms of the financial shenanigans of like buying coins just for the gains, that is what the perception is being created, unfortunately. And I think it's incumbent upon all of us in the media as well to keep banging the drum of why cryptocurrency technology is so important, and why it's so much better than the alternatives. And of course, there's just on the financial side we've talked about, but I think what would really not be great to see is ways in which blockchain technology and cryptocurrency could be used in other forms of and other network use cases that aren't just related to finance. I mean, this is why people have talked about the excitements around Deepen, for example, and all these things. I think that the only problem is kind of like, sometimes you got to ask yourself, does average retail are they idealistic about the concept of decentralization, for example? Do they care that if I'm using AWS infrastructure, it's fast, it's easy? I don't care. If I want to watch social media and I want to use TikTok or Instagram, I'll just use that. I mean, I don't care that it's decentralized. I don't care that I can be censored. I don't care that you don't control your account. They just, it's quick and easy and for them. So it's like, how do you get them across the line? How do you get them to understand the importance of decentralization and censorship resistance, at least in the non-financial sense? And coming back to the point around like why cryptocurrency in emerging markets and like stablecoin payments is so important, because people in the West, if you're living in the US, for example, or Europe, wherever, and you're making payments within Europe or in the US, and you've got PayPal and all these other quick and easy payment apps, you haven't experienced the being debanked. You haven't experienced having to make international payments. You haven't experienced a currency that's inflating away at like 1,000%. That is the case in many places in emerging markets. So you don't actually see the need for it. But when it comes, you'll appreciate it that much more. So my hope is that eventually people will come to realize the importance of decentralized networks and censorship resistance.
Let's say that we need to come to terms with the fact that Bitcoin is in a bear market and probably it will go down a leg more. What do you think are the assets that are the best poised for outperforming in 2026 outside of crypto?
Yeah, it's a good question. So much, because you realize that when you start peeking your head outside of the crypto markets, you realize how much of a wider world there is, and there's always a bull market somewhere. I think commodities are still interesting, especially, look, I mean, a lot of the rallies we've seen in silver, for example, have been retail hype and not really driven too much by fundamentals, although there is a big demand in terms of some base commodities and precious metals from industrial use cases. So, for example, one thing I talked about was copper as a commodity you want to think about, because industrially, you need to, from an industrial perspective and from a use case, a demand perspective, copper is essential for the build out of AI infrastructure. Think about the cabling, think about the data centers, etc. And copper has constraints in terms of like mine production. It takes years to produce a copper mine, and it's been running in a structural deficit in terms of over the past few years. So that's one commodity you could look at. In terms of the silver side, silver is obviously used within solar as well. So they build out, when they're building out these data centers, they need solar power, and China's got a massive solar build out, and silver is needed there. Also in batteries. Think about all the EVs that are being built. So there's fundamental demand for those. Silver has come off recently. I'll still be cautious jumping full in, because there is still retail speculative froth, but it's worth looking at that. On the stock side, I mean, it depends what your view is on the AI build out. I think that right now, and it's quite interesting because a lot of the AI stocks have kind of like traded down, like Nvidia has been down over the past few months. But we're starting to see a bit of a rotation into the value plays out of the high beta tech stocks, right? And this is what we're starting to see in terms of like specifically European banks, for example, like how they've been slowly performing over the past 2-3 months, because as the rotation continues. Obviously, there's been in Europe in general as a region. And stock markets in Europe have actually been outperforming the S&P over the past year, and particular sectors within Europe. So European banks, for example, which most people had dismissed as uninvestable a few years ago, is now something that's tending to outperform high beta tech stocks in the US. So that's a trend that could continue for at least a few months. So it's something to look into. So yeah, I think that it also centers around like where you think other investors are going to move as we go through these different cycles. I think that a lot of AI now is slightly overpriced, and I would be cautious of any of the hyped IPOs that we're going to be seeing this year as well, because those tend to look, the price action tends to look like the TGE of a very overhyped crypto project as well, post IPO.
And the final question, I would like to know if you have like a price target for Bitcoin in 2026. I'm sure that you have some ideas about it.
Yeah, man. I mean, it's fraught. Being a crypto YouTuber, I know the dangers of trying to make price predictions. I think Tom Lee's fallen into that trap as well, because you're going to have to move those out again. Look, I mean, in terms of where I think hopefully we are back above 100K by the end of the year. That all depends on what happens in the interim, whether Trump is going to run the economy hot, right? Like, we can all agree on the cycles drive a lot of things, but if Trump really gets his way and he gets the new Fed chair in there and he basically instructs him, and then they like basically go and run QE hot and pump the markets, and then we could see like Bitcoin goes towards its bear market low, but it comes sooner than October, which many people think that we could be going to in terms of the cycle low time, 1 year after the cycle high. But I think that the macro conditions seem to be manifesting correctly. So if I think we hopefully could be above 100K by the end of the year. But there are many factors that need to come right for that to happen. So yeah, let's see. Hopefully.
Okay. Well, Nick, I think that was all. It was a pleasure to talk to you.
It was great being on. Thanks again, Giovanni.